Good morning. Welcome to the Food as Business webinar series. First off, today we have Dr. Travis Mountain, who is an assistant professor here in the Agricultural and Applied Economics department. For those of you who don't know me, my name is Clint Neal. I am also an assistant professor here at the Ag and Applied Economics department. We are doing this webinar series to kind of bring out some information to people who can't make a full day workshop, which we offer all around the state. So if you're interested in doing that, do contact your local extension agent. Or if you're an extension agent and want to bring this out to your clientele, please do contact me, Clint, and we'll work out some dates and things that will work for you. But the first webinar series is about liability. We had a lot of interest in this at a previous workshop, and I thought we'd bring this out to the state, and Travis is kind of our resident expert on all that. So I'm gonna go ahead and pass it over to Travis to start talking about liability. We will field questions. If you'll hold your questions till the end of the presentation, feel free to submit your questions through the chat feature throughout the presentation, and then I'll feed the questions to Travis at the end when he's done. But look forward to hearing your questions in the end, and I'll pass it over to Travis.
Thanks, Clint. I think everyone should be muted if they're coming on. So if you're not muted, please make sure that you mute yourself just so we can avoid feedback and other conversations. All right, so first, before we get started, just talk a little bit about disclosure. So I want to make sure that we're aware that this information is intended for educational purposes only. Please do not take this information as legal or financial advice. Consult a professional prior to making any of these business decisions. So now that we got that out of the way, let's talk a little bit about liability. So we're going to speak about that. We're going to talk a bit about risk management, talk about commercial liability or business liability. What does that cover? What doesn't that typically cover? A little bit about costs, and throughout I will sprinkle some examples. So here's just a starter example, so something that many of us may be familiar with, and that is Chipotle. So November 2015, there was an outbreak of E. coli and norovirus at Chipotle restaurants. One thing that happened because of this is the outbreak raised concerns about other people in the food business, right? Saying if Chipotle was at risk of having some type of foodborne illness, what does that say for my company, which is most likely many magnitudes smaller? The way that this outbreak started was from employees that were sick at Chipotle, and they were working at Chipotle. They were touching the food, they were contaminating the food, and then that food went to consumers who then became sick. I think the final tally of this is that there were 100 people who reported contacting this virus. We don't know how much this costs Chipotle directly, but we do know that Chipotle settled out of court. So in this situation, Chipotle was liable, or they expected that they would be liable, so they E. court with people who were affected by this norovirus and E. coli.
What is invite you?
Another example just happened last year and officially closed January 9th, 2019, related to leafy greens. So the federal report claims that there were 62 reported illnesses spread across 16 different states, which also resulted in 25 hospitalizations.
Now you will go.
There was one specific California farm that was isolated. They found that there was romaine lettuce implicated in this nationwide E. coli outbreak. And then this particular farm also expanded its recall to include other forms of produce. So they began recalling red and leafy green lettuce as well as cauliflower. So it wasn't just constrained to leafy greens, or I should say just constrained to romaine lettuce. They suspect it was other produce as well. What was the cause of this outbreak? Well, it was discovered that sediment from a reservoir near where the produce was grown tested positive for E. coli, which was the strain implicated in the outbreak. Now, the official federal report suggests that they have no way of knowing if this farm was the only cause of this outbreak, and they suspect that it wasn't, but they haven't found any evidence for specific other farms. So here's another example of, you have somebody who is producing crops that's being sold to most likely restaurants for the most part, and there was a contamination, and now this company is going to be liable for it. So if you do a quick internet search, you'll see some law firms that are saying, if you think that you were affected by this, contact a lawyer to talk about some class action settlement. So if we're talking about risk management steps, we need to start thinking about what are the potential losses. So one thing we want to think about is how often will different losses occur. So if we're talking about the farm that was involved with the leafy greens, right, they're probably thinking that I am in this business, there's a chance that we're going to have an outbreak of something, but the likelihood of that is probably quite small. You also want to think about how much is at stake. So if we are distributing our produce to multiple states versus if we are distributing our produce at a local farmer's market, we probably have a lot less at stake at that local farmer's market. We then want to choose one or a combination of some type of risk management technique to control the risk. So due to time, I'm just going to focus on the box where I have insurance. So across the top, we have the frequency of any particular risk, and then across the left column, we have the severity of that risk. So where we have insurance, that's where we'd want to transfer some of this risk. So this would be an event that doesn't happen frequently, but if it does happen, there's a high severity, or we have a high loss if it does happen. So with that leafy green example, right, again, the frequency of something like that happening to any one farmer is low, but if it does happen, it's going to be quite severe. Similar for Chipotle, right? If they have some type of incident, the likelihood of that happening is relatively small, but if it does happen, it also is going to be severe. Not only in the Chipotle example did they have to settle out of court, but they also had millions of dollars in lost sales. Their stock price dropped, losing hundreds of millions of dollars easily. After we decide if we are going to have insurance, then we want to make sure that we implement some type of plan. So if we, throughout this, if we talk about various insurances and it comes, I have no idea why my screen is doing that, and we come to the conclusion that we do need to have insurance because we want to transfer some of that risk, we're going to have to implement that plan. So typically that means we are going to contact an insurance agent, and maybe we already have a policy and we just want to get clarity, what does that policy actually cover? If we need to make changes to our policy, we want to make sure that we make those changes. And if anything changes in our business, we also want to make sure that we implement those new changes. So that goes right in line with step 4. We want to monitor and adjust when necessary. So if we start out where we have a farm operation and we are just selling one type of produce and we're selling that at a farmer's market, maybe that's what we told our insurance person, that is our risk, that is our only business. But then maybe during the off season, you also decide that you are going to do some agritourism. You're going to have some people that are going to be coming to your farm. Now you want to make sure that you contact your insurance agent, just say, hey, I've expanded the business from selling produce at a farmer's market to also include people being on my property and doing some type of tours, right? So you want to make sure that you do monitor and adjust your plan when necessary. So let's talk about business liability, right? So business liability, the one thing that I do want to make note of, speak to a professional. So I've already mentioned speaking to an insurance agent, making sure that you're talking to a professional. Don't simply choose a policy that somebody else has chosen. So I see this happen a lot with business. I see this happening a lot with individual policies. Somebody just asks their neighbor or somebody else that they know, hey, what kind of insurance policy do you have? And then they automatically assume that that is the most appropriate policy for them. So don't make that assumption. You also want to check for any type of exclusions in your policy. And that gets me to my very next slide. My biggest mistake, right? So not my personal biggest mistake, but this is a mistake that I've heard a lot of people make, is that I thought I was covered. So you don't want to have this happen to you. You don't want to be operating under the assumption that your business is fully covered when in fact it's not. So that's again where you want to be talking to a professional and you want to ask them, what am I fully covered under and are there any exclusions? So here are some types of commercial insurance. So we are going to be focusing on liability insurance, but I did want us just to be aware of some other terms. So if you have a small business, you may have something that's called a business owner's policy, or abbreviated BOP. Other insurance companies may call this something slightly different, but essentially this is an insurance product that packages multiple types of insurance all under one label. So typically, a business owner's policy would include general liability, which we'll talk about in a little bit. It would also include commercial property. So commercial property, we could think of that typically as being like physical assets that we have. So maybe that's going to be a building. Maybe that's going to be a storage facility. It may also include business income or business interruption insurance. So let's say that we have a fire at this facility, right? So the fire is going to be covered under commercial property. But because we had this fire, maybe we're no longer able to sell our produce, or maybe we're no longer able to sell this product for a couple weeks. That's where business income or business interruption insurance would come in. Here I have some additional types of insurance. These are usually not going to be included in a business owner's policy. So if you are interested in any of these would be additional types of policies that you would get. One of the most common policies now that people are adding is related to data breach insurance. And that's something where when I deal with a lot of small business owners who are tax professionals, this is something that is really important to them because insurance or tax professionals, they have a lot of personal information on their computers, social security numbers, names, addresses. So they are targets for people who want to steal other people's identities. So they have data breach insurance. What is general liability? So many people may have a general liability commercial policy. What this is going to cover is property damage claims. It's going to cover third-party claims of personal injury. It could also cover advertising injury claims, administrative costs associated with these claims, any type of court costs and settlements and judgments. So this is kind of a general type of policy that many people may have. So let's say that we are at a farmer's market and I set up a tent at this farmer's market and there are heavy winds and it blows my tent and it crashes into a vendor right next to me, right? And that vendor right next to me becomes injured because the tent hit them and all the produce that they were selling also becomes damaged and it's not sellable. In that situation, my general liability insurance would kick in. So the property damage would affect anything that I damage of my vendor next to me, right? So maybe they had a table, it would cover the produce that they had. Anything else that they have would be covered under that property damage claim. This person also got injured. So if they had to go to the doctor, they had to go to the hospital, they had some type of medical bills due to this, that would come out of my personal injury liability insurance. Again, liability pays out for things that I was responsible for. It covers other people, other people's items. It does not cover my own items. Okay. Advertising claims, I don't want to spend too much time on that, but this would be the idea that, for a simple example, maybe we have some type of advertising, maybe on social media, and let's say that I am in the business of producing tomatoes, and Dr. Neal is also in the business of producing tomatoes, and I post something saying I have the best tomatoes and Dr. Neal's tomatoes are far inferior. They all have, they're all smaller, they're inferior, they have worms in them. He uses insecticide, pesticide that he shouldn't be using, those types of things, right? So those are false accusations that I'm making. Advertising injury liability would come into play in that situation. Right? If this does end up going to court, there could be court costs. If I'm found responsible, I could have some type of settlement. So like in the Chipotle example, they settled out of court. So that would come out of liability insurance. If I do go to court and we don't settle out of court and I'm found liable for a dollar amount, that would also come under my general liability insurance. So that specific example that I just gave where we're at a farmer's market, that's where general liability would come in. So many people may have this general liability insurance if they have business insurance. What's really important, though, for food as a business is to make sure that we have products liability. So products liability is the legal liability of any or all parties along the chain of manufacture of any product for damage caused by that product. It could be personal injuries, or it also could be property damage. So that's kind of a wordful. What exactly are we talking about here? So for product liability insurance, this may be a component of your general liability insurance, but you want to check to make sure, right? With product liability insurance, now we're specifically talking about, if we go back to that tomato example, is there anything wrong with my tomato? So if I sell this tomato at a farmer's market, somebody takes it home and they get sick, my product liability insurance is what's going to kick in if I am found responsible for their sickness, okay? So like I said, many people's general liability may have this product liability insurance, but not necessarily. So you want to make sure if you do have product liability insurance. Typically, if you have this under your general liability insurance, it has a coverage limit that is separate than your limit for your general liability. So for your general liability, maybe you have limit of $1 million, and maybe you have a separate limit of an additional $1 million for your product liability. So here I just have the point that this is really important to have for those that are in the food business. If you are selling food, you're in the food chain, you should be strongly considering having this product liability insurance. All right, so let's do an example. So here we have Paula Producer, so we got pretty creative. Paula Producer sells produce to Greta's grocery store, right? So Paula is making, let's stick with tomatoes, she's producing tomatoes, she sells them to Greta's grocery store, and then obviously Greta, being a grocery store owner, is going to sell those to consumers. So she sells that to Harry, the homemaker. Harry prepares and serves the food to his family and friends. The food is infected with some type of pathogen. Paula is potentially liable to Harry, as well as to Harry's family and friends who all consume these tomatoes. There's also the potential for liability attached to every enterprise in the supply chain. So that could be the producer, that could be the wholesaler, that could be the retailer. So in this example, not only is Paula potentially liable, but also Greta is potentially liable as well for having the grocery store that sold these tomatoes. So anyone along the supply chain could be held liable. So let's assume that in that example, Paula is found liable. So she's the one who produced these bad tomatoes. Let's also assume that Paula has $1 million in product liability insurance. Let's say that these tomatoes did a lot of personal damage to people, and she is found liable for $1.5 million. So everyone who ate her tomatoes, all of that injury and hospital bills, maybe loss of work, all of that amounts to $1.5 million. But her insurance only covers $1 million. So she is responsible for that remaining $500,000. So how does she come up with that $500,000? Well, she may have a commercial umbrella policy. A commercial umbrella policy is a secondary form of insurance, and it only kicks in once the primary insurance has been exhausted. So in this case, let's say that she has an umbrella policy that also covers $1 million. If she does, it would cover any type of loss between $1 million and $2 million. So in this example, if she has a $1 million umbrella policy, that would pay the additional $500,000. But let's assume that she doesn't have that commercial umbrella policy. So now her business assets are at risk. So maybe she's going to have to sell some of her inventory. Maybe she's going to have to get out of the business altogether, right? Maybe her personal assets are also going to be at stake. depending upon the structure of her business. So if she has a sole proprietorship, she has no liability shelter there. So if she owes $500,000 and maybe she has to sell her business, maybe that's worth $100,000, she's still responsible for $400,000. So if she's sued and she owes $400,000, maybe this means that they have to sell their personal assets. Okay. If she has an LLC, limited liability company, then her personal assets would be sheltered. Okay, but her business assets would still be at risk. I do want to make it known that for liability insurance, there's two different common types of insurance. So we may have a claims-made policy, and we may also have an occurrence policy. So we would have one or the other. So with a claims-made policy, that provides coverage over a specific time period and cover claims made during that time period, even if the claim occurred at a different time. So what would that look like? Let's say that we buy liability insurance today, and today is August 9th, and let's say that we have this policy in effect for the next year. So we have it August 9th, 2019 through August 8th, 2020. If there's any claim made against us during that time period, our liability insurance would kick in. Even though this incident may have happened last week, we would still be covered under a claims-made policy, as long as that happened between August 9, 2019 and August 8, 2020. If, on the other hand, we had an occurrence policy, that only covers the claim provided that the claim event occurred during that time. So an event would have had to happen between today and August 8, 2020 if we have an occurrence policy. So if we had some event that happened last week and we didn't have any liability insurance, and today is when we are sued or somebody's trying to make a claim against us, our liability insurance would not kick in, all right? So it is important just to note, if you're starting out with an insurance policy, especially to make note if you have a claims-made policy or if you have an occurrence policy. Many people may have a farmer's comprehensive personal liability policy. This may just be known as like a farmer's liability policy. There's a couple different names for it, but most of these policies exclude products liability except for raw agricultural products. So if you do have a farmer's liability policy, I would suggest, unless you're 100% sure what it covers, that you contact the agent who sold this policy and ask, hey, what kind of products does this actually cover? So processed products, or those obtained from suppliers, are not covered. So I would need commercial endorsement added or a separate commercial policy if I'm selling any type of produce that is not considered raw agricultural products. So here's an example. Something as simple as slicing a cantaloupe in half for sale at a farmer's market counts as processing and increases your exposure to liability, as well as possibly limiting your insurance coverage. So I'm going to scroll back one second. If I have this farmer's comprehensive personal liability policy, and I go to a farmer's market and I just sell cantaloupes, I don't do anything to them, again, you'd want to check your policy, but you're most likely going to be covered if anything negative happens due to that cantaloupe being sold, right? But if that same cantaloupe I take to the farmer's market and now I simply cut it in half, now it's considered a processed product, and now my farmer's liability insurance is unlikely to cover me. Again, this is something that you'd want to look at your specific policy to see if you'd be covered. So any operator that sells food products to consumers should familiarize themselves with the general principles of products liability. Proactive safety measures, though, are going to provide the best protection. So with that Chipotle example, if maybe they would have implemented more safety procedures along the line of people who were serving food, this might have been prevented. If they had more access to soap, water, more breaks, maybe if they had paid sick time, those type of things maybe could have prevented this issue. Food, meat, or any other produce containing foreign substances or contaminated with bacteria or pathogens subject the producer to liability. And this rule holds true even if the food was sold or produced or processed by somebody else. So here's an example. If we have a church that sells hamburgers or hot dogs at a stand on the premises of an agritourism operator, that agritourism operator may be liable if someone becomes ill from that contaminated food product. So where I work at Virginia Tech, if I am doing some large event and I'm bringing in a food vendor, Virginia Tech wants to make sure that that food vendor also has their own liability insurance. More specifically, in this case, if it's a food vendor, they want to make sure that they have product liability insurance, so that if somebody gets sick because of the event that I'm holding, that vendor is responsible for that loss. In the past, a lot of product liability cases in agriculture were simply involved the farmer as an injured party. So for example, farm workers injured by defective farm machinery, operators harmed by defective feed, medicines, or other chemicals have also successfully filed suit in various states. But as we know, a lot of that is changing because we have direct market selling. So producers are increasingly now the target of product liability lawsuits due to illness or death caused by contaminated products. And product liability applies to raw produce, baked goods, value-added products, and goods purchased for others for resale. So if I'm at a farmer's market, here we have an example of somebody who is selling baked goods, right? So some type of bread that they're making, so that would be counted under products liability. If this person also brings to market, let's say somebody is bringing, they're bringing cheese that's made by the business next to them, right? And they bring that and they sell that at the farmer's market, they are also responsible for anything that happens to someone's injury due to that cheese. There are three main factors that make products liability an increasing concern to agricultural producers in Virginia and across the country. One is that the number of claims and lawsuits in products liability has grown significantly over the last several years. Second, injured parties increasingly receive large amounts of compensation in these cases through either court judgments or through settlements. And the marked increase in the number of Virginia operations that include farmer markets and other direct sales of farm products expose producers to higher risk. So we just simply have more people that are entering this market, and it's an insurance that a lot of people haven't previously thought about. I was able to find top 10 property and liability claims. These numbers are from 2015. I wasn't able to just isolate the liability claims, so I highlighted the ones that are most related to liability in yellow. So on the left column, we have those that are most common, and on the right column, we have those that are most costly. So on the left column, we have product liability. So that is not as common as any of these other types of liability, right? Less than 5% of all property and liability claims are related to product liability. You're more likely that you are going to be affected by burglary and theft by a factor of about 4, right? The most costly, though, if we look at that, product liability is much higher. So the average claim is about $35,000, right? So again, we're going to have some that are lower, we're going to have some that are much higher. So if we are just the average, if we have a product liability claim against us, right, it's something that's a low likelihood event, but on average, if we have that loss, it could be $35,000. So again, I have to think to myself, right, $35,000, is that something that I want to have insurance for, or is that something that I'm going to self-insure? If I self-insure, that just means I have enough financial assets set aside where if there is a claim, I'm just going to pay it out of pocket. The cost of liability, though, about 35% of these claims result in a lawsuit, right? So it may result in a lawsuit because maybe there's an insurance claim and the adjuster of that insurance disagrees with the dollar amount that the victim is seeking, or they disagree that the vendor was at fault. So that may lead to a lawsuit. This can increase the average claim to more than $75,000. So now if $75,000 is the average and I am choosing to self-insure, now I have to ask myself, do I have 75,000 set aside in case there's a claim made against me? And again, I know I just mentioned this, but the average is 75,000. I mean, this could go into the millions. Likewise, this could also be much smaller. In 2017, the average price of general liability for a small business was a little more than $700, right? So for the most part, these policies are not that expensive. Again, some things that are going to influence the price would be the amount of sales that we're doing. So the amount of sales that we're doing and the type of business that we're in. So is our industry, does it have a high level of risk? Okay. So does it have a high level of risk, yes or no? And what kind of level of risk is that? All right. Then once that's determined, the price is usually some multiple of your sales amount times some insurance factor. And the insurance factor is based on what's the probability that there's going to have a loss, and also the fact that the insurance company needs to make a premium, some type of dollar amount on this. Right? So if I'm doing $1 million in sales versus I'm doing $20,000 in sales, we both may have product liability insurance, but if mine is $20,000 in sales, it's going to be much cheaper than somebody next to me who has $1 million in sales. Oftentimes when we have liability insurance, this insurance is going to be a year long. So typically it would be renewed every year. And let's look at how that could affect us. So for example, your sales increase from $20,000 in year 1 to $30,000 in year 2. Your premiums may also increase by 50%. It may not be quite 50%, but you could expect that your premiums are going to increase. Another example, for year 1, you are rated for $20,000. So let's say that we go to our insurance agent and we deem that we need to have liability insurance, and the insurance agent asks us, how much do you expect that you're going to do in sales? And we tell him or her $20,000, right? The end of the year comes around and we found out that we actually did $30,000 in sales. Well, quite often your insurance company is going to want to see your financials to see how much did you actually produce, or what was your actual sales amount. The reason for that is because over the last year, they were insuring against any type of claim against you. And when you say that you were expected to do $20,000, they priced it as if you were doing $20,000 in sales. But you actually did 50% more, you did $30,000. So they are going to increase the amount of money that you owe them retroactively, as well as impact the amount of money that you're going to owe them going forward, right? So if in year 2 you also expect that you're going to do $30,000 in sales, they're going to charge you a higher premium for that, but they're also going to ask for more money from year 1. Okay? And I have a real quick mouse, so that's why we're kind of jumping around a little bit. Apologies for that. All right. So I'm hoping that this document pops up. So this is an example of what a policy may look like. Can you see that? All right, so this is a certificate of liability insurance. So I was the named insured, so it has my name on it, and it has my personal address on it. It has who the insurance company is, so I had one insurance company, so it was Insurer A. If I scroll down a little bit, we see that this was general liability and it was commercial general liability, okay? Also, I made note of the difference between claims made versus occur. So we know that because occur is checkmarked, only if an incident happens during the specific dates of my policy will this insurance ever pay out. So the policy effective date was for 24 hours. So it was December 30th, 2017 through December 31st, 2017. So I needed a policy just for a single day. I didn't need a policy for an extended period of time. Some other things that I'm looking at in the left column where it says type of insurance, there was host liquor liability. So I was at a venue and the venue was the one who had the liquor liability. I also have some aggregate limits. So that's the maximum amount that the policy would pay out. Can you see my mouse or not? No. Okay, so under limits, under the right, It's saying that this particular policy would have paid out $1 million for bodily injury and property damage. So this was an event that I hosted, and if anyone got injured at that event, it would pay out $1 million if somebody got hurt or if we did some type of property damage at that event. For medical expenses for any given person, it was also going to pay out up to $5,000. This next line is that advertising injury. So this isn't really something that I was too worried about because we didn't have any advertising for this injury. No one was going to be hurt by this. The general aggregate is saying that the maximum that this policy would have paid out, if we take into account the advertising injury and the bodily injury and property damage, was $2 million. Okay? But then we also see this line for products, right? So this is going to be the product liability, and usually the product liability is a completely separate number. So it also would have paid out $1 million due to product damage that I had. So if I had products that were being sold or given out at this venue and someone became hurt because of that product, I would have had insurance of $1 million. It also shows here that if I had any claim and insurance was going to pay out, I first would have had to pay a $1,000 deductible. So I would have paid $1,000, and then the insurance company would have paid out the liability amount up to these limits. If I scroll down a little bit here, all right, so now you'll see additional insured, right? So under additional insured, it has Hotel Roanoke and Conference Center. So this event that I had was held at the Hotel Roanoke Conference Center in Roanoke, Virginia. And the reason that they are added is because if there's a claim made against me, there's a really good chance that the claim is also going to be made against the venue. So Hotel Roanoke wants to make sure that I have insurance that's first also going to cover them, right? The person who's filing a claim probably assumes, and likely in this situation, that Hotel Roanoke has deeper pockets than Travis Mountain has, right? So there's a really good chance that they would come after Hotel Roanoke. That's another reason why if I'm hosting some type of venue at Virginia Tech, why Virginia Tech wants to make sure that anyone that's coming in, so maybe it's going to be a photographer, maybe it's going to be a vendor with food, they want to make sure that they also have their own insurance and that they add Virginia Tech as an additional insured person, right? So if there is some type of claim against that venue or that incident, it first would go to this policy, and then Virginia Tech has some overarching policy that would also kick in. But Virginia Tech in that situation doesn't want to be the primary insurance. All right? How are we doing on time? Okay. Now, in most states, producers are strictly liable for injuries incurred due to contaminated products sold by them regardless of fault. That's what's known as strict liability. However, this is not the case in Virginia and a few other states. In Virginia, the two main grounds of product liability exist would be negligence and breach of implied warranty. So we're going to be talking more about negligence because that's more likely to be the issue with food products. The law deems products defective if unreasonably dangerous because of a defect in assembly or production, unreasonably dangerous in design, or unaccompanied by adequate warnings concerning hazardous properties. For the most part, for food products, it would be about a defect in assembly or production. So maybe we weren't taking the proper safety checks when we were producing this. Maybe we weren't, if we go back to that tomato example, maybe we were not cleaning our tomatoes, or maybe we were not cleaning our lettuce, right? Those kind of things. So that's where we could be found that we were negligent. A person wishing to recover under negligence must prove that the producer or seller failed to exercise reasonable care in producing or marketing the product. So we would need to find out why were these tomatoes contaminated, right? Was it from the fact that they didn't have adequate cleaning conditions? They weren't following safety protocols. Now, for Virginia, if the consumer failed to exercise due care in using the product, contributory negligence exists, right? So what that would mean is, unlike almost every other state, in Virginia, contributory negligence prevents the consumer from recovering any amount of personal injury or property damage. So here's an example. A producer sells beef to a consumer who becomes sick after eating the cooked beef. right? So did the consumer leave the meat out for a long period of time? Was the consumer at all responsible for this? Could it be the fact that the consumer got sick because they left the beef out for a couple hours longer than they should have, and then they decided to cook it, right? If that was deemed that's what happened, then the producer would not be held liable, right? Again, that's something that's relatively unique to Virginia and a few other states. So for summary, every business should considering having some type of commercial liability insurance, particularly some type of product liability insurance if you're going to be selling specific products. Build the costs into your prices, right? This shouldn't be something that you're looking at as an extra cost. It should be something that you're looking at as an input cost. Also, more than likely, your premiums that you're paying for this insurance are going to be tax deductible, right? So the value of that all depends on what our specific tax rate is, but more than likely that's going to be tax deductible. Instead of thinking I cannot afford to have this insurance, one should be thinking I cannot afford not to have this insurance, right? Most individuals, most small businesses do not have enough financial assets where they could self-insure, where they could offset any type of claim made against them. All right, so that's the last slide that I have, but I do have a shameless plug in here. Dr. Neal said that another topic that people were interested in, we're hearing more about taxation of farmer and agricultural producers. I do have a couple of sessions for that. We have one in Roanoke, we have one in Weir's Cave, and we have one in Richmond. They are 4-hour sessions. I do just want to note that this is more of an advanced level, so the majority of people by far who attend these sessions would be tax practitioners and professionals, so either enrolled agents or CPAs. But if you are interested and you want to attend, you can get more information at tax.vt.edu. Registration also comes with an agricultural tax issues book, which is something that many land grant universities, Virginia Tech being one of them, contributes to. So that book is probably going to be around 150-ish pages talking about taxations as it specifically relates to agriculture producers. So that's all I have.
Ask them if they have questions.
Does anyone have any questions for me or any questions for Clint? And maybe the easiest way to go about doing that would be to type them in the chat box so we don't have a lot of people trying to speak over each other. Yeah, so I can make sure that so the question is, can we get a copy of the PowerPoint? Yes, so I can make sure that I distribute that to Dr. Neal, and he can distribute that. Yeah, so these will also be archived. Dr. Neal will be in charge of that, so I'm not exactly sure. They are going to be available. I think he will disseminate some more information on that. But yeah, they will, I believe, be on a website. Yeah, yeah, so they will be on a website. So look for more information about how to access this at a later time. Good question. Okay, so the question is, does this expand beyond any type of food produce or production, right? So if I am selling anything at, and this specific question was geared towards farmers markets, if I'm selling something that's not food related, should I have any type of liability insurance? And I think the question that you have to ask yourself is, regardless of what your product is, could somebody become injured because of this product, right? So if I'm at a farmer's market and I decide that I want to sell baby quilts, right, I'm going to make quilts for babies, that is something that you may think, okay, there's really no risk involved with that. But if we have a baby that dies and our blanket was on them, right? Now the question could be in play, was I liable for that? Did I disclose the type of risks that are associated with babies and with blankets? That babies should not be sleeping with blankets, right? That's a good question. You know, the baby blanket is just something that came to the top of my mind. I'm not an expert on baby blankets and liabilities. But the short answer is yes. I would strongly consider talking to an insurance professional, say, hey, these are the products that I sell, right? Is this something that I should consider? Now, more than likely, if you're going to be having liability insurance and you're going to be selling it at a few farmers markets, and maybe you're doing hundreds of dollars or a few thousands of dollars worth of sales, your premium is going to be relatively low, right? So I would look at it as, for possibly a few $100s, I have a peace of mind. I don't have to be concerned about potential, claim or being sued due to the products that I'm selling. Okay, so I think the next question kind of gets at, I'm doing some sales and I'm not doing significant sales. At least maybe that's how I'm interpreting that question. And I think that kind of piggybacks off my last answer, right? So if I am, distributing to 20 different states, I think most people would say that's a no-brainer. I should have liability insurance. If I am selling to just a few buyers, right, I would still be concerned. Because if there's any defect in my product, it only takes one person to be personally, property damage or personally damaged because they get sick, something like that, and I am responsible for that. So if I had any type of business, and even if I only had one buyer and it was just going to a few people, I would still strongly consider having liability insurance, right? Again, this is just an educational presentation. I can't tell you that you should be buying it or you shouldn't be buying it, but it's definitely a conversation that I would have regardless of what my sales are. Okay, so the question is, what if I am bartering? So if I am trading some type of product for either another product or service, yes, I would still consider liability insurance, right? And that would be something that you would talk to your insurance agent, and they would say, okay, well, you're not actually collecting, let's just say, $2,000 in sales, but what is the value of the items that you are receiving in exchange? Are you receiving $2,000 worth of services or products in exchange? In that case, yeah, it's really no different than if you were receiving cash. You are still putting a product out in the market that you are responsible for.